Meanwhile, Amazon shareholders have little to complain about right now. In 3 years, the stock has gone from $300 a share to over $1,300. And with food sales now soaring, along with all other retail items they're involved with, who knows where the stock will be in a year. So why is stockholder Ralph Nader unhappy? Let's ask him. So, Ralph, what's your beef?
It's for 20 years, Amazon, sitting on a pile of cash and a lot of executive wealth, hasn't paid a dividend. That money belongs to the shareholders. It will stimulate the economy. A 2% dividend will pump $8 billion a year into the economy, into mutual funds, pension funds, individual investors. We did try this with Cisco. Cisco, a few years ago.
With Cisco.
Yeah, you remember that.
Your pressure helped raise the dividend quite a bit. But let me just ask you. Look, if I'm somebody who bought shares at 300 or 6, I guess you bought your shares at a discount from where it is right now. What were they, about $800, $900 a share when you bought in?
It was $960.
All right, so it's now $1,300. People who've made a lot of money on paper are very happy right now.
That's on paper. You put your finger on it. Amazon stock is hugely inflated. It's selling 300 times price earnings. Facebook, for example, is 33 times price earnings. But these new companies sitting on piles of shareholder cash like Facebook, Google, Amazon, they got to share it with the shareholders.
But hold on a second, Ralph, because Amazon is not Apple. Amazon does not have as big a pile of cash. They were putting a lot. In fact, one of the complaints of Amazon was that they were putting all of their money back in to the company to expand their market share. For years, they weren't making any money, any profit. The money kept going back into improving their market share. Turned out Bezos knew what he was doing.
Well, he should ask the taxpayers whether they, he should ask the shareholders whether they want dividends. I think most shareholders do want dividends. Most pension funds, university endowments, mutual funds, individual shareholders like myself, we want a regular dividend. It establishes a fundamental basis of stability for a company.
But Ralph, what I would do if I bought the shares, and I didn't, I wish I had, but if I bought the shares at $300 or $400, and I saw it go up to $1,300, I'd sell half of what I own and be very happy. That's what I take as a profit instead of a dividend.
That's what you would do, but there are a lot of people who don't pay any attention to this. They're part of mutual funds and pension funds, and they deserve dividends. You know, one thing, if there's a government investigation announced of Amazon, and there's indications that there are, that stock's going to deflate very rapidly. 300 to 1 is an incredibly inflationary ratio. So the important thing is to put it on a stable basis of dividend paying, which studies show are much better for companies
Ralph,
and shareholders.
I'm getting a wrap, but I just have to ask very quickly, do you put the same pressure on Berkshire Hathaway, on Warren Buffett stock? They haven't paid a dividend for years.
You put it on all big stocks that have cash flow. People who want to be part of the shareholder effort on Amazon, the way we did with Cisco, just go to nader.org/contact and give us your contact.
Well, and you did have success with Cisco. God bless you on that. Ralph, thank you very much for coming in. Interesting. Appreciate it.